60-40, right? This is one of those splits we often talk about, equities and high income bonds. We are set for the worst monthly slide since the meltdown in the early days of the pandemic. You go back to March, and we've got a lot of up and down movement here. We're really just looking at monthly return. And when we talk about the period of January, when you put that 60-40 split together between equities and fixed income, we're talking about a decline of around 5%. That is the combination of noticeable declines in equities in the neighborhood of 6.7%, and then losing ground in the bond portfolio, about 2% based on the Bloomberg U.S. Aggregate Bond Index. And Matt, as we look back on this chart, you see 2018 as well, as we sort of move through this, the end of this chart, another period where a Fed tightening conversation really did start to change basically the balanced performance. Yeah, you can see that there, kind of 2018, and then once again where we are now.
I love this chart, and I love that we brought it up to a full screen, because now you can see better that this month is shaping up to be the worst month for the 60-40 since the pandemic began in March of 2020. And the real problem here is that a 60-40 portfolio is the kind of thing that teachers, cops, Joe Sixpack have. The Canadian and U.S. Retail component that is so important, consumer that is so important out there, right? So when they have a bad month with this kind of conservative holding, that makes you ask, how much are they going to be willing to spend, and how much can they drive the growth of the economy going forward? So when we have a difficult time for the big cap stocks and the safest fixed income, it's a real problem for the entire economy.
No, it's true, and it speaks to the fact that there haven't been a lot of reliable places to hide. I mean, in the equity market, obviously, Matt, we've talked a lot about the outperformance of, let's say, energies and to a lesser extent financials, but it's worth highlighting that fixed income performance. And we know, Matt, as well, that 5% down for a balanced fund, that's frustrating for some, but in the case of some of those hard-hit technology stocks, we're talking about much bigger declines so far this month.